Will the US earnings season continue to distract investors from America's disastrous COVID-19 headlines? Broadly, the US earnings season, especially updates from the likes of JP Morgan and Goldman Sachs, has been a welcome sideshow for the Dow Jones et al. It has allowed the markets to sporadically turn away from the nightmarish COVID-19 numbers coming out of the United States, including the fact that California has effectively had to re-enter lockdown to try and keep a lid on its most recent spike. That Donald Trump is reportedly seeking to stop billions of dollars in track and trace funding, despite the United States marking a 41st record-setting day of fresh coronavirus cases, has only added to the desperation for some good news from elsewhere. Luckily for distraction-seeking investors, there are plenty more big names reporting this week. IBM are up on Monday, while Coca-Cola may struggle to match PepsiCo's snacks-led outperformance on Tuesday. Wednesday's the real hot date, with both Tesla and Microsoft making an appearance. Tesla have been on a real tear in July, even when factoring in a slight dip in the last week or so. Since the start of the month, the stock is up 39% to just over $1,500, having fallen from a peak of $1,600. It will be interesting, however, to see how investors react to Wednesday's second quarter update. Analysts are expecting Elon Musk's company to post a quarterly loss of 63 cents per share, yet bafflingly, that would be a 43.8% improvement year on year, alongside a 21.6% drop in revenue to $4.98 billion, as, I guess, customers sort of tighten the purse strings and stop buying cars during the lockdown era, especially since, they're not quite as useful when you can't go anywhere. As for Bill Gates and the gang, Microsoft, potentially benefiting from a lockdown surge in tech purchases, be it software or hardware, is forecast to post an 8.5% increase in fourth quarter revenue to $36.59 billion, with a 2.2% jump in earnings to $1.40 per share. It's really interesting to sort of compare the two, given that Tesla is the company with far more buzz around it than Microsoft, which is sort of an old safe pair of hands at this point, yet their financial performances couldn't be more different. Rounding out the week, Twitter, which could see an uptick in user and engagement metrics thanks to people just sort of stuck at home scrolling through social media. An Intel update on Thursday, with Verizon releasing its latest figures on Friday. As for the economic calendar, it's not quite as packed as the earnings calendar. Existing home sales arrive on Wednesday, with the usual weekly jobless claims figure on Thursday, which is still coming in above the million mark, but is gradually shrinking back towards that level. Friday is the most relevant releases in the form of July's flash manufacturing and services PMIs. In June, both numbers neared but failed to reach the crucial 50.0 mark. So investors will be hoping the PMIs can cross that level this week. And they should get their wish. Analysts are forecasting a 52.0 reading for the manufacturing sector and a 51.0 reading for services. It'll be interesting to see how much these earnings and these figures can sort of distract investors from the US COVID-19 case numbers, given that they are now increasingly inching towards the 100,000 case a day mark. I think 80,000 is the next sort of big target that it seems to be heading towards, given that it was increasingly coming in above 77,000. And if that is the case, investors may struggle to actually look away from those figures and focus elsewhere, because that is getting into an increasingly untenable situation in the US, especially if the government isn't willing to actually support individual states in terms of financial aid as they try and manage these alarming spikes in cases.